Hello there, this is FairBinaryOptions.com, and we are moving on with our Binary Options Academy projects. And what we have here is a classical, I would say, theoretical part, but also one of the most important and interesting trading strategies, if you want, or trading techniques. It is being called the Elliott waves. Now, what is Elliott wave structure, and what is this name coming from? Well, Elliott waves comes, of course, from a guy that has been called Elliott, Ralph Elliott, and invented this theory that has been applied for or has been developed for the stock markets or the currency market, the stock markets. Yes. Now, nowadays, the same principle and the rules for the Elliott wave theory are being applied on the currency markets as well, and basically you can trade with the theory different setups and different financial instruments if you know the rules and if you know what to look for when trading. Now, Elliott wave theory in principle is pretty simple, in the sense that it goes 5 ways up, 1, 2, 3, 4, 5, or motive move, or a 5-way structure, or an impulsive move should always be corrected with 3 ways down, A, B, C. This is Elliott waves. This is how Elliott waves looks like, and this is the basic principle of the move. Now, of course, if the 5 ways up are to the upside, then it is being called a bullish impulsive move. If the 3 ways down are to the downside, then that is being called a bearish corrective move. But it is very much possible that the 5-way structure to the downside to be impulsive move, so a bearish price action, and the 3-way structure to be a corrective rally, it is being called, but still a 3-way structure. So in terms of Elliott waves, any 5-way structure, any 5 ways move that travel in one direction or another should be corrected by another 3 ways. Now, if this is a first wave here, and this is a second wave here, and this is the third wave here, and of course the 4th wave to the downside, 1, 2, 3, 4, and 5 should be corrected with A, B, and C. Well, if this is 1, 2, 3, 4, 5 and A, B, C, this is being called a cyclical move. Now, the tricky thing is that this is easy to be understandable by anybody in this world. But the tricky thing with this move is that in an advanced move here, the 1st, the 3rd, and the 5th wave are being considered motive waves, and they are being formed on their own by another 1, 2, 3, 4, 5, said to be of a lower degree. So the 3rd wave as well should be formed out of 1, 2, 3, 4, 5, but of a lower degree. The 5th wave as well should be formed out of 1, 2, 3, 4, 5, but of a lower degree. And then, of course, the corrective waves here, this should be out of a 3-way structure, either simple or complex, A, B, C. This should be out of a 3-way structure, either simple or complex, A, B, C. So the key to correctly count the waves on or with the Elliott wave theory is to know when a move starts and when a move ends, and of course to try to go and look for the call options when the correction is about to end and the impulsive move to start again, or to look for put option where a correction is about to start in an impulsive move to the upside. It is not that clear all the time, because as you very well know, or probably are aware, out of this 5-wave structure here for the third wave, the first wave of a lower degree should be formed out of another 5-wave structure here, and 3 waves here, and 5-wave here, and 3-wave here. If this would have been a monthly chart, then this would have been called a top-down analysis, and you're starting from the bigger time frames like the monthly chart, and then you go with the weekly, with the daily, with the 4-hour, and you go on the small segments and you look for places to buy call options. Now stay tuned on the second part, what is Elliott waves, and we'll like to point out what are the main places or the main areas to buy call or put options when you label such a move, and we'll try to look at an example here on the Great Britain pound and the US dollar. So stay tuned please for the second part.